So let's go transaction by transaction. Arun of Bombay opens branch in Surat on 1st January. Now, since it's a new branch, he's opened it on 1st January. We are not going to have any opening balances. If you see, there are no opening balances at all because it's a new branch. He remits rupees 5,000 and sends goods costing. So, first thing that he does is he sends 5,000 rupees. Okay. So, on 31st December itself, actually not 31st December, it's 31st March. I will put it as 31st March because we don't know when he sends, so we're just putting everything as of 31st March. 31st March, sorry, 1st January. This will have to be 31st December. Since he's opening it on 31st December, 31st 12/07. Okay, since he's opening it on 31st December. So, to cash, he has sent to cash, he sent money to cash. He has sent 5,000 rupees and he has also sent goods costing rupees 20,000. So goods sent to branch account on the same day. Two goods sent to branch account. The amount is 20,000 rupees. Now, one of this transaction, cash rupees 5,000 is going to also come in the cash or bank account. Okay, it is also going to reflect in the cash or bank account. So we'll post that accordingly. So to head office. What's the meaning of to head office? That is a cash received from head office. The head office has sent cash worth 5,000. Remember, cash bank is a debit balance. It's an asset. Okay, so any increase in assets is on the debit side, any decrease on the credit side. So if you had a two balance brought down, it would have been this side. We don't have an opening balance, but we know that the head office is sending cash of 5,000. Okay. What happens next is Surat branch deposits rupees 4,500 in Dena Bank. Surat branch deposits 4,500 in Dena Bank. Now, this is not going to come in the branch account because this has got nothing to do with the head office, but it's going to come in the cash and bank account. What does it mean? Right now we have cash of 5,000. Right now we have cash of 5,000. But what are they doing? What the what is that? The what the branch is doing is it's taking that 5,000 and putting it in the bank account. Can anyone tell me how this entry will be reflected? It's taking that 5,000 and putting it in the bank account. Sorry, not 5,000. It's taking how much? 4,500. It had 5,000. It's taking 4,500 and putting it in the bank account. How will this come? You have passed these entries, I think, right from the 11th standard or in the 11th standard onwards. We used to call them contra entries. You remember? Mieka has said something. Yes. Basically, on the other side, you're going to show it as what is happening. You have cash. Okay. You have cash of 5,000, but you're taking that cash and depositing it in the bank. So basically, cash of 4,500 is going out. So when you're posting it this way, you're going to say buy bank. Okay. And it's going to be 4,500. That's not it. There'll be two effects to it. It's a contra entry. You have taken part of your cash out of 5,000, you've taken 4,500 and you have put it in the bank account. That's why we are saying buy bank. Cash is going out. Cash is coming in on the debit side. Cash is going out on the credit side. But since you're taking cash and putting it in the bank account, you're also getting a bank account. Okay. So here on this side, you're going to have two cash in the bank column. In the bank column, you're going to have 4,500. In the bank column, you're going to have 4,500. What is the meaning of this? You had cash of 5,000 with you, but then you take 4,500 and put it in the bank account. So that's why we say buy bank. Okay. Basically, if you try to see how much cash you have right now, will be just 500 because out of 5,000, 4,500 is put in the bank account. So you'll have cash only of 500, but you have a bank balance of 4,500. You have a bank balance of 4,500. If I just try to balance it, just to make you understand, by balance carried out. Say this is the only transaction, and I want to balance it to know what is my balance. In the cash column, how much will I get? 5,000 minus 4,500, 500. And in the bank column, I will get a balance carried down of 4,500. This is just to make you understand what is happening right now. Okay, these are called contra entries where you show the effect on both sides. Why will you show the effect on both sides? Because one asset is decreasing and the other is increasing. Your cash is decreasing and your bank is increasing. Any questions here? Any questions with regard to this? Anyone has any questions with regard to this? This is called a contra entry. If you remember, we had an extra column here and we used to put a C on both sides. When you used to do the cash bank account, what you have learned in 11th standard. Any questions? Okay. Assuming there are no questions and going ahead. Next. Now we come to the other things. Cash sales. Okay. Now cash sales, we know that now we'll have to check account by account. We know that it doesn't come in the branch account. Okay. Whatever cash has to come, it's already put here separately. So that we will take later on. But cash sales directly do not come in the branch account. Cash sales also do not come in the debtors account because they are cash sales. Okay, only credit sales come in the debtors account. Similarly, cash sales surely not going to come in the creditors account, but cash sales will affect your branch cash or bank account. Cash sales are going to affect your branch cash or bank account because you're receiving cash. Okay, but one thing that they have told you here, see, cash sales. Okay, we'll just leave credit sales for now. Collections from debtors. What they have said is cash sales, collection from debtors on account of both these transactions. You're receiving cash from cash sales and collection from debtors. Collection from debtors is you receive money. What they're telling you is proceeds from cash sales and debtors are deposited directly into the bank. Proceeds from cash sales and debtors are deposited directly into the bank. So instead of showing this as cash, I will just show it as a bank entry. Okay, because what they're saying is proceeds from cash sales. They're not even keeping it as cash, but they're taking that cash and putting it directly into the bank. They're taking that amount and putting it directly into the bank. So because of this statement, the cash sales and the amount received from debtors, I'm going to directly show in the bank account. So what I'm going to do is two cash sales, not in the cash column, but in the bank column. Why in the bank column? Because they're depositing that amount directly in the bank, and also to receipts to debtors, the amount received from debtors, that is 12,000. I put both together just for you to understand better. Okay. Why have I done this? Only because of this statement. If this statement was not there, what I would have done in the cash column itself, I would have shown 25,000. Debtors also in the cash column, I would have shown 12,000. But what they are telling you, they're not keeping it as cash. The moment they receive it, they're putting it in the bank. So instead of, there could be some who would say, first show it as cash, then show it as cash, then show it as a contra entry basically. Cash going out and showing a bank transfer. But instead of doing that, I'm directly showing it in the bank because of that statement. Okay, so two cash sales come here. This receipts, yes, correct. So this debtor, it will come in the debtors account as well. It will come in the debtors. I'm talking right now from the cash account point of view. Cash sales won't come in the debtors, but the amount received from debtors will surely come in the debtors. Okay, so that is what I'm going to put next. Buy cash, which is going to be 12,000. Okay, so actually we are done with cash sales and we are also done with collection from debtors and we are also done with this. We've shown this effect already. Okay, going on, credit sales. This will come only in the debtors account, which is 17,000. Two credit sales. There's no opening balance, so two credit sales. 17,000. I hope everyone knows why it comes this way. Debtors is a debit, is a shows a debit balance. Okay, anything that increases the amount your debtors owe you will be debited. Anything that decreases, credit sale, that means you're selling more goods on credit, your debtors will increase. But when they pay you, it comes on the other side, because if they have paid you, that means the amount that they owe you decreases. So what increases the debtors, what decreases the debtors? Sales returns, again 1,500, this will be in the debtors account. By sales returns, the amount is 1,500. Okay. Next we have cash discount. Okay. Now, where will this cash discount come? The first thing it will come is in the debtors account, because you're giving your debtors a discount. By discount, the amount is 300. Now, since they have said cash discount, some people may get confused that it has to come in the cash account. Now, what happens when you give a uh, you actually, then you'll say you can minus all this from your credit sales. If you're talking about minusing sales returns, you can say you'll minus all this. You don't need to show it that. We normally show in the trading account that way. We normally show it that way in the trading account. I know you're talking from the trading, that kind of, that point of view. Okay. You don't need to do it. This makes more sense. This makes more sense. What increases your balances, what decreases your balances. Okay. Now, I was talking about this is, since this is said as cash discount. Okay. It surely comes to the debtors account. Some people may also think that it comes in the cash or bank account. Now, what comes in the cash or bank account is a movement of cash or bank. That is cash actually coming in, cash actually going out. Cash actually coming in, cash actually going out, or money actually coming into your bank account, or money actually going out from your bank. Now, through this discount, okay, think logically. Through this discount, they've said cash discount, okay, and it's a discount given. It's a discount given. It's a discount allowed, because you're giving a discount to the debtors. Cash discount. Cash discount to whom? You're giving a discount to your debtors. Okay. Through this discount, is there movement of cash? Since you're giving the discount, is cash going out? Is cash going out? Yes, very good. There's no movement of cash. How do you give a discount? Say, suppose someone owes you 10,000 rupees. If you're giving them a discount of 500, what you receive will be 9,500. You're not going to give them, they're not going to give you 10,000, and then you're not going to pay them 500 rupees. Okay, so normally when they are paying you, they will pay you the amount minus the discount. So this cash discount, even though they have said it as cash discount, remember it's not going to affect the cash or bank account. What affects the cash or bank account is a movement of cash or bank. As in, when I say movement of funds, cash coming in, cash going out, amount coming into the bank account, amount going out from the bank. Literally the movement of funds. Is that clear? So this cash discount is not going to come in your cash or bank, because there's no movement of funds. Your debtors must have paid you the amount less the discount. Is that clear? Okay. Collection from debtors I've already shown. This also I've already shown. Proceeds from cash already shown. Amount sent to head office by bank transfer. So now we are going to see on 31st December 07. Okay. I'm going to say by bank You can just to understand what it is, remittance. Remittance means the branch is sending to the head office. It's not the credit side, and the branch has sent an amount of 34,000. Okay. Now, what else will this affect? What else will this affect? It's surely going to affect your cash or bank account. Yes, it's going to affect the cash or bank account. If you remember, we had collected and deposited directly in the bank account amount from cash sales and amount received from debtors. What the branch is doing right now is sending, this is 37,000, sending 34,000 out of this to the head office. Okay, so I'm going to put it as by head office, in brackets remittance. It's going to be from the bank account. The amount is going out from the bank. You are deposited in the bank, part of it you're sending down to the head office. Not part of it, almost a huge part of it. Okay, so we are going transaction by transaction, checking where the effect will be. Sometimes it can be in just one account, sometimes it can be in 2 or 3 accounts. Next. Goods received from head office in addition to the opening stock. So this is going to come here. Again, 2 goods sent to branch account. If we were doing branch stock account, all these 2 would have come in the branch stock as well. But we don't have to do because everything with regard to the stock is given to us. So goods received from head office in addition to the opening stock is 25,000. This is not going to come anywhere else. It's only going to be here. Okay, this is not going to affect any other. Next one, Surat branch expenses paid in cash, paid by check. Now, Surat branch expenses is what? These are expenses that are incurred in by the branch itself. It's not going to come here. These are expenses incurred by the branch. It's not going to come here. But since there are expenses which are paid in cash and paid by check, they will surely affect the cash or bank account. Now there is movement of cash. So I'm going to say by expenses. By expenses. They've told us how much is in cash and how much is in check. In cash, they've incurred expenses of 400 and by check, they've incurred expenses of 5,000. 400 and 5,000. Okay. Then we have local purchases. Now again, local purchases have got nothing to do with your branch account. But these local purchases, like I said, will affect your creditors. Okay. Now, which side will this come? I want to know from you. Which side will this come? In the creditors account, which side will this local purchases come? Which side will this local purchases come? Very good, Rupa. It's good. Rishvesh, good. It's going to come on the credit side. See, your creditors always start with a buy balance carry down. Though there's no opening balance here, buy balance carry down. Always a credit balance, it's a liability. Now, through further purchases, your creditors are increasing. Through further purchases, your creditors are increasing. So I'm going to say buy purchases. And the amount of purchases is 3,000. Okay. Then stock on 31st March at Surat branch. This is the closing stock. So I will say I'll just leave a line and say buy balance carry down. The first thing that we have is stock. The others we will have to find out. 20,000. And payments to creditors by check at Surat. So if we said buy purchases, if you're going to pay them, it's going to be to, they've not, they've told us by check. So it's going to be to bank. Anyway, if you're going to pay your creditors, what would be the entry? Creditors account debit to bank. To bank, and how much has been paid? An amount of 2,000. Okay, and this is also going to affect your cash and bank account. So I'm going to say by creditors. By creditors, since it's a bank transfer, they have paid an amount of 2,000 by bank. Okay. So that's it. Now we will have to close these accounts to find out the balances. So here we have a total of 17,000 by balance carried down, which is the balancing figure, the whole reason we have prepared this account. So 17,000 minus 12 would be 5, 5 minus 1, 5 would be 3, 5, 3, 5 minus 3. I think it comes to 3,000. Similarly, by creditors, here you have a total of 3,000, 3,000. To balance carried down would be 1,000. Okay, so if like I said, your creditors would have had a buy balance carried down if there was an opening balance. So to balance carried down will be 1,000 rupees. And this side we have, yeah, your cash is the debit is more. So we have 5,000 here and 5,000 here. Buy balance carried down. Okay, so buy creditors, buy balance carried down. This is going to be 5,000, 4,900. So it's going to be 100. So that means you have cash in hand of 100. And this side is going to be 25 plus 12, 37, 37, 41, 500. 41, 500. Again, this is going to be the balancing figure here. Balancing figure. So this is going to be 41, 500 minus 41,000, which will be 500. That means you have, if you check your bank passbook and get a latest update, it would be 500 rupees, a balance of 500 rupees. Now this we need to transfer to our branch account. So first branch debtors by balance carried down. So debtors closing balance will be, debtors we have a balance of 3,200. Cash in hand, cash at bank. Creditors are not going to come this side. Creditors, it's a liability. So the bank balance will be on the other side. Cash in hand will be 100 and cash at bank. Cash at bank will be 500 and we will have a two balance carried down on the same date. Two balance carried down. That will be our creditors, which is going to be the creditors are 1,000. This is how the branch account looks. So if I total this, yeah, I think there is a profit again. So 34,000 plus 54, 54, 57, 57,800, 57,800 and two profit and loss account. Two profit balance carried down is always the last item, even though the balancing figure is the profit and loss account. To profit and loss account is 20, 45, 45, 50, 51. So 7,008. Sorry, 6,800. It's 51,000. Any questions?